Banking plays a powerful role in your financial journey, shaping how you save, invest, borrow, and grow wealth over time. But most people use banks every day without truly understanding how they work or how to use them to their advantage. In this video, we're breaking banking down into 5 simple, practical sections. Everything from the basics to credit, loans, investments, and the future of digital banking. Whether you're trying to build wealth, avoid financial traps, or make smarter money decisions, this 5-part guide will give you the tools you need to take control of your financial life with confidence. Banking is the foundation of modern finance. At its core, a bank is a safe place to store money, access credit, manage payments, and build financial stability. But today's banking system does far more than hold a checking account. Understanding how banks operate helps you make smarter decisions and avoid unnecessary fees while maximizing your long-term financial success. Banks offer 2 primary types of accounts: checking accounts designed for everyday transactions, and savings accounts designed to store money and earn interest. Many banks also offer certificates of deposit, CDs, money market accounts, and high-yield savings accounts. These products differ in interest rates, accessibility, and minimum requirements, but all serve the purpose of helping your money grow safely. Banks also provide essential services like direct deposit, debit cards, mobile banking, and online bill pay, making it easier to manage your financial life on the go. Modern banks use advanced security, encryption, and fraud protection tools to keep your money safe. However, fees can add up. Monthly maintenance fees, overdraft charges, ATM fees, and wire transfer costs can drain your account if you're not careful. That's why choosing the right bank matters. Some banks focus on low fees, others on high interest rates, and some on business services or digital-only convenience. Credit unions are another option, offering membership-based banking with lower fees and competitive rates. Ultimately, understanding these basic principles helps you pick the best financial partner for your goals. The more you know about how banks work, the easier it becomes to navigate your financial future with confidence and efficiency. Credit and debit are 2 core tools in the banking system, but many people use them without fully understanding how they impact their financial life. Debit cards pull money directly from your checking account, making them a great way to control spending. You can't spend more than you have unless you allow overdrafts, which can lead to costly fees. Debit keeps you grounded, safe, and in control. Credit cards, on the other hand, let you borrow money from the bank and repay it later. When used responsibly, credit cards can help you build a powerful credit history, earn rewards, and access financial opportunities like mortgages and auto loans. But if mismanaged, credit can turn into high-interest debt that's difficult to escape. Your credit score is a key factor in borrowing power. It's influenced by payment history, credit utilization, length of credit history, types of credit, and new inquiries. A strong score opens the door to lower interest rates, better loan approvals, and higher credit limits. A weak score can cost you thousands of dollars over time. Banks also offer credit building tools such as secured credit cards, credit builder loans, and financial education programs. Understanding the difference between credit and debit helps you make better decisions, avoid fees, and build long-term financial strength. When credit and debit are used together wisely, they give you balance. Debit for everyday purchases and budgeting, credit for building history and accessing opportunities. Mastering both is one of the most important steps toward financial independence. Loans are one of the most important services banks provide. They allow you to borrow money for big purchases like a home, car, education, or business. But loans come with a major responsibility: interest. Understanding how interest works is the difference between borrowing smart and falling into financial traps. Banks offer several types of loans. Personal loans are often used for emergencies or large expenses. Auto loans help you buy a car. Mortgage loans allow you to purchase a home over decades. Student loans fund education, while business loans help entrepreneurs launch or expand their business. Each has its own interest rate, terms, and repayment structure. Interest is the cost of borrowing money. It can be fixed or variable. Fixed interest stays the same for the entire loan, offering predictability. Variable interest fluctuates based on the economy, which can raise or lower your monthly payment. Your credit score, income, and financial history also determine your interest rate. The key to borrowing smart is calculating the true cost of a loan, not just the monthly payment, but the total amount you'll pay over time. A loan with a slightly lower rate can save you thousands of dollars. Banks often provide loan calculators and financial advisors to help you understand these numbers. Avoiding unnecessary debt should always be a priority. Borrow for needs, not wants. Pay on time, keep balances low, and look for opportunities to refinance if interest rates drop. A smart borrower uses loans as tools, not traps. With the right knowledge, borrowing can help you build wealth, not destroy it. Banks play a major role in helping you save and invest. Savings accounts are the first step, but they're only the beginning. To truly grow wealth, you need to understand the full range of financial tools banks offer and how to use them responsibly. Traditional savings accounts keep your money safe, but usually offer low interest rates. High-yield savings accounts, however, offer much higher returns, especially through online banks with lower overhead costs. Money market accounts offer better rates with check writing abilities. Certificates of deposit, CDs, lock your money away for set periods in exchange for guaranteed interest. Beyond savings, many banks provide access to investment opportunities, including mutual funds, bonds, retirement accounts, and brokerage services. These tools allow your money to grow faster than in a standard bank account. For long-term success, understanding risk levels is essential. Banks often categorize investments as conservative, moderate, or aggressive. Compounding interest is the secret weapon of wealth building. When your money earns interest and that interest earns more interest, your savings can grow exponentially over time. Even small monthly contributions add up when invested consistently. Banks also offer financial planning, automatic transfers, budgeting apps, and retirement guidance. Using these tools can help you develop strong money habits and stay on track with your goals. Whether saving for an emergency fund, a home, or retirement, banks provide the structure and security needed for steady financial growth. With smart strategies, banking becomes a powerful partner in your wealth-building journey. The future of banking is digital, decentralized, and more accessible than ever before. Over the last decade, technology has reshaped how people manage, store, and move money. Banks are no longer just physical buildings. They're mobile apps, online tools, and digital systems working 24/7. Online banks offer low fees, high interest, and fast access. Mobile wallets like Apple Pay, Google Pay, and Cash App have replaced physical wallets for millions. Instant transfers, digital checks, and online bill pay make managing money easier than ever. But the biggest shift is the rise of fintech and blockchain technology. Fintech companies compete with banks by offering faster loans, higher savings rates, and innovative financial products. Meanwhile, blockchain introduces decentralized finance, DeFi, allowing people to borrow, lend, and invest without traditional banks. Banks are responding by adopting advanced technology, AI fraud detection, biometric security, real-time alerts, and automated customer service. Digital identification, instant credit decisions, and smart financial tracking tools are becoming standard features. Banking is moving toward personalization, where your bank understands your habits and tailors services to your financial goals. Cybersecurity is also evolving. Banks invest heavily in encryption, data protection, and multi-layer authentication to keep your money safe in a digital world. The future of banking is faster, smarter, and more global. Whether through AI, mobile apps, or decentralized platforms, banking is entering an era where convenience meets innovation, and everyday people gain more control than ever before. Banking isn't just about accounts, cards, and loans. It's about understanding the financial tools that shape your life. When you know how banks work, how credit builds power, how loans create opportunity, and how saving and investing grow wealth, you take control of your financial future. Whether you prefer traditional banks, online platforms, or the rising world of digital finance, the key is using these systems intentionally. Thanks for watching this 5-part breakdown of banking. If you learned something valuable, hit like, subscribe, and share this video with someone who wants to master their money. Your financial journey starts now.